You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And today, before I begin, remember there is a website associated with this podcast called wealthformula.com. Check that out. Lots of resources there, things to sign up for, things to download, all sorts of stuff. This week's show is about the personalization of personal finance. Because, of course, personal finance is personal, but you can take it to the next level with, oddly enough, technology. So, anyway, what is this all about? Personal finance. It's the personalization of personal finance. Well, it's really about the decentralization of finance. And why is decentralized finance advantageous? Well, since we're talking about technology, why don't we just go ask ChatGPT? Here is the explanation value of decentralized finance from ChatGPT software itself. I'll try to not read this like a robot, because I think that's the problem. Like you can't, it's not something you really want to hear. But it talks about accessibility. DeFi allows anyone with internet connection to access financial services without needing to go through a traditional financial institution or intermediary. And this opens up financial services to people who might not have had access before, particularly those in unbanked regions. Because, of course, what decentralization is, this is me, not ChatGPT, by the way. You might have noticed a difference in voice. But the decentralization component, all that's doing is taking the platform out, right? Making it a peer-to-peer type of transaction. That's what the whole idea is, and that's where the accessibility part is. Then there's transparency. DeFi operates on a public blockchain, which means that transactions and financial data are visible to anyone. This transparency reduces the potential for fraud or corruption and allows for greater accountability. There's security. Well, and that one's basically just about cryptography and, making it so that there can't be a catastrophic single point failure, which takes down the entire financial system. Number 4 is interoperability. DeFi protocols are designed to be interoperable, meaning they can work together seamlessly, allowing greater flexibility and innovation in the development of financial products and services. And then finally, it's efficiency. Basically here, it's saying DeFi operates 24/7, not on the hours of the New York Stock Exchange, right? That's kind of the concept, which I think that always amazes me, how we've not not closed the markets for the weekend or followed the Eastern time and the Wall Street market, for the entire financial market to turn on and off. It's kind of crazy to me. Anyway, not bad, robot. I have to say, you're a little dry, but I would have really liked to have the opportunity to use ChatGPT back when I was in college, so I could have cheated and made life a lot easier. And I'm sure the kids out there are going to do that, so that's good. Listen, here's the thing. Decentralized finance, bottom line, is going to become mainstream finance in our lifetime. That's why I keep hitting it hard on these episodes. I know we've been talking a lot about technology. Large institutions are going to have to adjust, or they will simply be irrelevant as the phone booth 20 years from now. I really believe that. So we need to understand what it's all about, because, again, that's where the puck is headed. And how do we figure out how to capitalize on it? Well, the only way you're going to do that is if you understand it. And the best way to understand it is probably not from a robot, but from an expert in this space. And that is what I've got for you this week on Wealth Formula Podcast when we come back from these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Emmanuel Daniel. He is an entrepreneur, author, and is recognized as a global thought leader in the future of finance. He is also the author of The Great Transition, The Personalization of Finance is Here. Emmanuel, thanks for joining Wealth Formula Podcast.
Thank you for having me on, but I enjoy the few podcasts that I've had and watched, and let's see, where we take this conversation.
Oh, great, great. Well, I think there's a lot to talk about here. You talk in your book about everything becoming financialized. What does that mean?
Well, very simply, anything that can be turned into data can be turned into a financialized product. And when you think about what money is today, it's just numbers rolling, and the markets are looking for any form of data that they can trade on. And today, I think it was Jeff Immelt in 2014 who said even GE is not going to be a manufacturing behemoth anymore. It's going to be producing lots of data out there, and GE's balance sheet is going to start looking like a trading book rather than a manufacturing company. And the thing about markets is that it goes out there and looks for data in any form that's tradable. I mean, it started with LIBOR and indices and stuff like that. And today, all sorts of businesses, Tesla is saying that it's more of a data company rather than, manufacturing cars, things like that. So the more data we have, I think entire civilizations are going to go in to look for, what's tradable and what's not. And so we're on a learning curve, that there will be data that is tradable, and there will be data that is non-tradable. And over time we'll start settling down, but it's going to be a very, rough ride. And, there will be people out there who would run after certain data because they think it's going to be going up or it's going to be valuable, and then discover that, in most cases, data in the end is going to turn out to be commoditized. In other words, the more data you're going to have out there, the less valuable it's going to be. I think that some of your viewers would have heard the phrase that data is the new gold, new oil, or something like that. I say in my book that data is actually vegetable, in the sense that the more data you have, it loses its value. The less data you have is unusable. The older your data, it's unusable. The younger your data, you need for it to mature. That kind of thing. So when I say that we are creating a financialized economy, the perspective on things like GDP is also changing. I think in the US now, the statistics department has put in elements that constitute the GDP that is no longer manufacturing or hardcore assets. It now starts to look into soft assets, intangibles, even value that is created out of perception that is part of the GDP. So just based on that alone, there is no saying that the US GDP can go from 21 trillion right now to 45 trillion, based on a lot of intangible assets, a lot of which will be data. So we need to prepare for that, for the rewriting of entire economies going forward.
What are the implications of that for our manufacturing state partners, like China or India? It seems to me like if we're moving, obviously we've moved away from manufacturing in general, but what you're really talking about here is that, all of these trading markets are just going to be data driven and, as you said, entirely intangible. So what's the effect on, our manufacturing partners in various countries?
I think that the U.S. has effectively given up its manufacturing capability, and it started on a journey in the 1990s, in about 1995, when it was companies like GE saying to the unions and saying to investors that, we need to reduce cost, and since labor in the US is very difficult to negotiate with, we're going to take it out to somewhere else. And this journey started in the 1990s, and that journey has gone to such a such a deep meaning that you've actually created other countries like China and India, which have now taken on the mantle of being the manufacturing states, and they themselves will be going through a metamorphosis which will make them export their manufacturing capability to other less developed countries and so on. What the US has become, and that's something that we need to put our finger on, is that it's become the world's leading frontier of being able to handle information, data. And from data, it then handles perception, because the real value in data is there are no underlying assets, as it were. It's actually driven a lot more by perception than anything else. We see that today when you think about cryptocurrencies, for example, and where they get their valuations from. It's basically what the market perceives, or what a segment of the market perceives the value to be.
And if I could cut you off there, like with that's kind of, I think, part of my what I'm trying to understand is, with most cryptocurrencies, if not all, they're really, I mean, I don't know how much actual data there is per se, rather than speculation, right? I mean, so are we really talking about data, or are we talking about speculation, ways to speculate?
Well, that's a very complex question in there, because part of the speculation comes from the years of cheap credit and high liquidity, a lot more money than there are assets out there. And that's a historical problem that already exists. But there's a new element in speculation that comes out of assets that are created in the digital world, which have no underlying value or no underlying business that drives it. There is the promise of future business, because the digital world is creating applications, utilities that will be very specific to the digital world. Then there is speculation there as well. Sure. So there's something that I do in my book, which is, towards the last chapter, I borrowed an idea from a futurist in the 1990s. He wrote this. He said, society is transitioning from the tribal origins to institutions, and then to markets, and then to networks. And we are right now in the transition between markets and networks. So when you say, speculation in markets is a little different from speculation in the network phase. In the market space, the speculation is exactly the same as everything that we have experienced in the securities market. When you think about Bitcoin, the rules for Bitcoin are the same as the rules for any other securities that exist. And when you buy and sell shares, and the reasons why it goes up and goes down operates on the same principle for cryptocurrencies. But in the network world, there's a whole set of new rules that are just being created. So we need to sort of separate the two and figure out what is it that we are playing on, and then sort of track where it's taking us.
So you talk about your book's about the personalization of finance. Do you want to talk a little bit about presumably with regard to all this data, what exactly is the personalization of finance?
Well, the personalization of finance is that the function of the intermediary is being depleted. A lot of that has to do with the fact that, of course, because of data, but a lot of that has to do with so much technology being put into the ability of people to relate to each other, to transact value, to be able to actually exchange tokens of value with each other, which do not require the intermediary anymore. So financial institutions of all kinds, whether they're banks or fund managers, and markets as in general, platforms and exchanges, they're finding that their role is being diminished increasingly, and that individuals like you and me, we will start to be able to exchange value, discover each other, trade with each other directly. So the personalization of finance is that the power of the relationship is actually transitioning to the individual. Now, this is a long, a road. It will take several generations to finally begin to, create new realities. Because what's happening now is that the platform players, it can be the Googles of the world or a exchange. And there are lots of different types of exchanges for cryptos, for commodities, and so on. It's so easy to build an exchange now. The intermediaries are trying to redefine their role and still be relevant to the individual. But increasingly we'll see that the individual will have a stronger role and a power in that equation.
So, I mean, what you're talking about, I think a lot is, we've talked a lot about blockchain and smart contracts and that kind of thing. It seems to rely fairly heavily on that kind of technology. And this is the kind of technology that a lot of major institutions like Chase Bank and stuff have been pretty antagonistic towards. And I'm curious, I guess what do you anticipate the impact on those large institutions to be, or do they figure out a way to get themselves involved somehow? It's almost like you've got this situation where you've got Kodak, and they're making, cameras and film and stuff. And all of a sudden you've got a digital camera. How are you going to save your business? So how do these institutions, how are they going to look at this?
So what I'm saying in the book is that, and I speak to the institutions when I say this, is that Kodak invented the digital film in 1995 together with a few other players, but it loved its core product so much, which was the 35 yellow box, and continued selling that well into the 2000s, while Sony took over the metal of the digital camera, and then later the iPhone came out, and by 2010 Kodak was in bankruptcy. So the funny thing about institutions is that they love their products so much that they won't give up what they have until it affects them directly. Now, the thing about JP Morgan and a whole load of institutions that talk down to some of these innovations that are coming through is that they're creating their own tokens. They're creating their own response to this. That's the first thing to be said. Yeah. The second thing to be said is that today institutional investors are just as important as the odd guy who's investing in cryptocurrencies. They have cryptos on their balance sheet, and that's affecting the valuation of crypto as much as the few individuals who are considered to be whales in the industry and so on. And the same central banks that are trying to create their own central bank digital currencies, which actually sort of chasing the technology that's being advanced on cryptocurrencies, will start being able to have cryptos on their balance sheets from 2015. The Bank for International Settlement has set a set of rules so that central banks can carry them as well. So while they're talking against it, they are also preparing for a world where cryptos will become a necessity. Now, by saying all this, I'm not necessarily just giving a blanket approval of crypto. In fact, I think that the valuation of crypto distracts from the real, the essence of what it is the function that is going to be playing in the future. In all likelihood, the valuations that we see today is going to collapse in the future, because today they're dominated by a few whales whose transactions then chase prices up and down and so on. The more investors there are, the more liquidity there are in any market. It stabilizes the market. It brings valuations closer to what the trades are. So the genie is out of the box. The question to now ask is, what is the utility of these cryptos in the digital world? And we're starting to see a lot of those utilities. When you take any one of those cryptos like Solana or Tezos and so on, they represent like 300,000 programmers in open source platforms. Building applications and working on them. There is not a single IT company in the world that has that amount of energy around, just one proposition or one platform in that way. And then on top of that, they're being funded through all the money that is being put into cryptos to be able to, make money on the applications that they're developing. So that's the real value of the crypto world. Now, the question then is, how is traditional banking that we are familiar with going to morph and embrace some of the technologies that are being created in the crypto space? And I've been looking at a lot of the utilities being created in crypto. I can actually see how they can apply back into traditional banks. I've been recently, long after I've completed the book, I started looking at specific areas of the banking industry. So like the treasury function, for example, that's actually decentralized finance. In what a treasurer does in a bank is that on a daily basis, he tries to square out all the positions that the bank has, remove as much of the risk, and increase the profitability of the bank for the amount of assets that it holds on any one day. And that's becoming increasingly difficult to do for any institution. And yet, in the crypto space, there are hundreds of little applications, with algorithms put into them that enable the crypto world to function, seamlessly. And so I can see some of the technology being applied to traditional institutions. So the genie is out of the box. We're not going back to a non-crypto world.
Right.
Now, question to ask is, what is the utility of what's happening in the digital space that's going to transform the manual world that we are familiar with?
Sure. How do you think, a number of these, a number of cryptocurrencies are under scrutiny from the SEC, and they've got all these other regulatory issues. Doesn't that have to sort of fix itself before this whole movement starts? I guess there are some platforms that have been pretty good about trying to follow the rules. I mean, for example, Hedera, I think is a good one. But in general, how much are those regulatory issues going to slow down the process?
We live in a world where the regulators are chasing after the innovations that are taking place. And so, there will always be gaps, and there will always be, the need to try and make sense of where this is going and what's the proper, regulation should be. And we are now at the point where the regulators in the US are asking, whether crypto is an asset or a security. That's a very basic question. And it'll debate that through until it comes to an understanding. At the same time, the technology itself will keep moving, and it will keep evolving such that maybe it won't be a security. It will clearly not be a security further down the road. When we think about all that's happening on the regulatory front, we think about every time there's been an innovation, what was the story? So, in the early 1900s, after the automobile became commonplace, in other words, Henry Ford made it possible for anyone to have automobiles. The original set of regulations were stacked up against the automobile because they were trying to safeguard, the traditional horse carriages. So, you couldn't go ahead of the horse, and the automobile was heavy, it damaged the streets and all of that. And then over time, the automobile became quieter, faster, lighter, and safer. So the regulations didn't apply, after a while. So I think that's what we will see in the crypto space. And right now, the biggest problem in the crypto space is that because the early investors in the crypto market still control so much of the value in the market. We need to see that release over time and before the market becomes stabilized. And the valuations that we see in the market actually distracts from the utility of the technology as it's evolving. So we need to see that phase work its way through before we start making sense of what the technology is capable of.
You might have alluded to it a little bit earlier. What's your take or your knowledge on this idea of central bank decentralized currencies? So there's been a lot of talk about those. Do you have a sense of how realistic that is, and if it is, then what purpose does it serve?
Yeah, central bank digital currencies. That's what you're meaning. Now, the thing is that I've been following central banks, throughout my nearly 30 years of following the industry, and I actually, visit the Bank for International Settlements in Basel, and I know quite a number of, central bank governors and how, I walk into central banks, I know how they operate. And still, I'm just surprised at the level of support that they are giving themselves for the idea of a central bank digital currency. Now, I've also been following the central bank digital currencies from the time when it was not a big topic, in the early 2010s, where there were central banks that experimented with it and then put it aside, saying that, that's not something that we want to, go ahead with. And I think it's because China took it on and made it a big project that the other central banks also fell in line and said, we want to do this too. That's how central bankers operate, by the way. Every time one central bank comes up with an idea that the others like, and then everyone else follows through. So just recently, Jeremy Powell saying that, no, we're going to keep the inflation targeting in the US to 2%. He was actually repeating an idea that originated with New Zealand about 20 years ago, and then it became popular for just about every central bank in the world to subscribe to this idea of inflation targeting. And so today, this notion that every central bank should issue a central bank digital currency is very popular. But having said that, in a number of countries, if the central bankers just went into the streets and just asked people if they subscribe to the idea that a central bank should issue a central bank digital currency, which is direct from the central banker to the end user, which, by the way, bypasses the commercial banks. And so all the central banks that are toying with this technology are saying, we don't really need the banks when we do this, but we'll give them a role. We will make them be the issuer of the central bank digital currency. So that in itself, creates the first problem, which is that it's a solution looking for a problem. If you're going to disintermediate your own institutions, then why are you doing this?
Well, and then the other question too is that, frankly, most, look at dollars. Most dollars are digital already. So what's the additional benefit of having the decentralization? What's the point?
So the digitalization that you're talking about is a digital account, which is your money is in a bank, and when you transfer it to another person, you're doing it digitally anyway. But that's fiat money, and that's actually a balance of transfer of balance, which is a balance sheet problem. There is no real money moving anywhere. It's my account against your account, and we just square out our accounts to each other. A central bank digital currency is actually a token that gets transferred. So regardless of the balance sheet, a digital token, just like a physical token, got passed on from one person to the next.
So you can avoid the issue of settlement, I guess, in that matter, right?
So that's what they're saying. But what's interesting is that everything that's happened in the crypto world has gone on faster and further down the road than what the central bankers are doing today in the experiments for trying to set up central bank digital currency. And I've actually visited two of the countries that have already implemented them, and the governors have told me personally that the projects have been a failure. And that the take-up of central bank digital currencies have not been very good because the traditional banks still believe in their credit card swiping technologies because that's where they make
their money there, right? And in that, in that is where I see a lot of the challenge, because a lot of these institutions are so powerful, and in terms of their lobbying and everything else, to just kind of continue to sidetrack these things. But I would imagine that over time there would be a inevitability about it that would make some of them adapt, just like in your example of Kodak and Sony.
Well, and in order to adapt, they have to keep up with the speed and the depth of the technology as applied in open source. Open source is the world where any IT programmer can just go onto a platform and look at other IT programmers working on the same applications as you are, and there's a very powerful force in which technology is being created, which central banks will never be able to match. Just when they get their central bank digital currencies right, the applications for it would have gone like 10 times down the road. And so I'm not confident. I'm not convinced that any central bank digital currency will actually take off in a meaningful way. And in fact, there is an alternative, which is for central banks to tame what's happening in stable coins today, and to onboard the stable coins that meet regulatory requirements, which have good balance sheets that are audited, to play the function of a central bank digital currency, because there the central bank is actually benefiting from the energy that's out there.
Fascinating stuff, Emmanuel. The book, again, is The Great Transition, The Personalization of Finance is here. Presumably it's available at their usual outlets, such as Amazon. You have another book coming out, too. What is that book called?
The Winning Civilization. Yeah.
What is that one about in sort of at a high level?
Actually, when completing the book on, The Great Transition, the Personalization of Finance is here, I came to the conclusion that if finance is going to be highly personalized, it's going to have an impact on how entire societies are going to be organized. And so this book is about the critical success factors for countries to have in place for them to make that transition. And as I alluded to in our conversation, the U.S. still leads in the use of information. When I say it leads, it means that it is both a victim as well as a purveyor of the future of information and data. And that's why we see a lot of the confusions that we see today. But what the U.S. learns, the rest of the world will learn in the future.
Emmanuel Daniel, everyone. Emmanuel, thanks for being on Wealth Formula Podcast this week.
Thank you very much for having me on.
We'll be right back. Welcome back to the show, everyone. Hope you enjoyed that. Certainly a very interesting show, I think, and something to think about. Now, how in the heck can we capitalize on it? And quite honestly, I have not figured that out for myself yet. However, maybe I'll ask ChatGPT and get an answer. That's it for me this week on Wealth Formula Podcast. Thanks for joining me. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.